Welcome back. You're watching On the Move, a space, but just moving on from there to the outlook of how the markets are actually doing. We've got with us a very special guest joining us this morning. Nirmal Jain, Chairman of IIFL, joins us. Thanks very much, Mr. Jain, for joining us this morning on Bloomberg UTV. Mr. Jain, just to get started, we did see a very strong run last week for the markets. Can we infer that the worst is possibly over for our markets, or will the events like Friday's US jobs data continue to affect markets like ours?
I think for a medium to long-term investor, market valuations are very tempting, and there are many investors who are looking at opportunities, from again, as I said, 3 to 5 year perspective. So this is a good market to buy for those who can invest and hold it for a longer term, and not for those who will feel jittery if in 3 months or 6 months time, markets direction is uncertain and goes in a negative territory. Today, the kind of world that we are living in, uncertainties, particularly in Europe and US, they remain. And whenever any negative event happens there, no one can deny that there will be some impact here. However short-lived, but there will be some impact here. So we'll have volatile movements in the market. But as I said, the valuations are attractive, and for long-term stock, because it's a good market to start buying.
Morning, Nirmal. That's of course a long-term view that you have, but purely for the near term, the fear in the market is whether 4800 would be broken. How do you stand at IIFL? You think there is a risk of Nifty breaking 4800?
I think risk is very, very minimal, because India remains a very good investment destination for long-term investors, and there are number of long funds. They are looking at opportunities to invest in India from longer term perspective, and at 4,800 we have seen that there are good many investors who come forward and support. So I personally feel that 4,800 is a level which is very good support and a strong support. It can be breached only in case of exceptional circumstances or some catastrophic event somewhere outside or inside India, which we can't imagine or we can't foresee today.
You did land up talking to a lot of FIs, right? What is the sense that you're getting from there? Is there that panic and concerns over India right now with the kind of policy move that we're seeing with the Reserve Bank of India, or some of the long-only funds actually considering India and looking at India as a buying opportunity?
Despite whatever we have seen here, I don't think there's much panic about India. In fact, people are waiting for opportunities to invest in India. And, whenever they find attractive valuation or attractive sector, they look at opportunity to invest. They are more concerned about what is happening politically. And on reforms, there are two aspects. One is the policy front, where government is showing some decisive moves. So we have seen that guidelines about new banks have come. Government is talking about FDI. But what they are more worried about, or more they'll be enthused about if there's a positive development, is government's movement on infrastructure projects, and going ahead on, say, road sector, power sector, port, and showing serious commitment that financial closures take place. The various raw material linkages are, concessions are given, and government sees that projects take off and from the ground. I think that is what will have a cascading impact on growth in various sectors, and that is what basically will enthuse foreign investors more.
So, Nirmal, what's the kind of inflection point that you're now looking at for a change in the market sentiment? Clearly we are in a bit of a bear market rally right now. For that to turn into a full-fledged bull market, what kind of catalyst are you looking at? Is it earnings? Is it pause from RBI, global factors? Is there one factor that you're looking at?
I don't know whether any one event will be able to turn it around, but maybe a few events like good monsoon, that is, touchwood, more or less, we are experiencing all over the country. Along with that, crude oil prices fell, but they bounced back. So I think if crude oil prices correct, that will be very good for Indian economy. And maybe one trigger, which is not very likely given the RBI's track record, but still, one maybe bit of wishful thinking. If RBI, reverses the interest rate cycle, and the interest rates are brought down, or even if they're kept stable, I think there will be a big trigger for the market.
Just to talk about a few counters as well that will be in focus today. In fact, it's a brand new listing. Brooks Laboratories, which is a pharmaceutical contract research and manufacturing services company, is looking to hit the markets today. And of course, this IPO is expected to raise about 63 crores for the company. The company, remember, is not chosen to have any roadshows and is not also looking very attractive on back of being a little overpriced. At least that's what most analysts believe. If you take a look at the financials, they've got about 9 odd crores of debt on the India books and are expecting to have a market cap of about 162 crores if the stock lists at 100.
Nimal, just a word on IT stocks, because on Friday also we saw quite a bit of fall on the Nasdaq, and that's something that a lot of investors are worried about in terms of valuations, contracting further to maybe 13, 14 times. What's your view on the IT stocks after having seen the kind of correction in these stocks?
I think IT sector has become very attractive, and selectively one should look at investing in this sector because the correction has been overdone. Primarily, we should understand that in the US, things are not as bad as Europe, which is a major market for most of the IT companies. And more importantly, in the US, most of the corporates are cash rich. They have a good amount of cash on their balance sheet. The problem is at the government level, but most of the US corporations are doing very well. So I think IT stocks, from medium to long term perspective, look good. I mean, they will have a good steady, 20-25% growth if they can give. Then these kind of valuations are very, very attractive.
Valuations are attractive. That's pretty much seems to be the key word for most analysts as well. Well, we've also got with us Prakash Garba joining us from our Mumbai studios. Thanks, Prakash, and good morning for you. Just to get started, Prakash, SGX Nifty indicating to a gap down opening below that 5,000 marker. But Anuj and me were talking earlier of how this could possibly just be a knee-jerk reaction in the morning. But what's going to be important is to watch out for the close.
To me, the last three or 4 days that we have seen this move looks like more of a reactive up move, which basically means it's gone up to come down. So even if it does go up in this entire campaign, I don't think it's going beyond 5,200 or 5,250. So the upside seems to be capped. So far, it's a reaction. Should gap down opening is more of a sideways move. If an up move is to start, then the market has to consolidate in the low regions. Unless that happens, it's not going up. So far, I would say it's up, so it should be down. If gap down open, it's more of a reaction, no doubt. But the market certainly is weak, does not display any sign of strength as yet.
So what sort of a range would we be looking at today? I mean, FI buying has been quite active on Friday, right? So keeping that in mind as well.
Yeah, it has been, buying has been active for the last 3 days, the entire last week. That's purely because of short covering and perhaps because of 31st year ending valuations per se. To me, I would look at I would not look at the range down. What I would look at is on the upside, maybe around 5,050, 5,200, strong resistance and trade down. Simple.
Morning, Prakash. So, would you say that at every rally now one should start looking at shorting again? And what kind of stop loss will you have for that?
Well, the previous move is down. This is more of a pause in the move. The down move continues. Unless that changes, why should I be short? Why should I be going long? In fact, should be shorting. So on the upside, I don't see in this campaign anything beyond 5,200 or 5,250. So any rallies until then can be sold with a stop above those regions and continue the way down.
But let's talk about a couple of stocks. I don't know if you track them, but they were quite active on Friday. Chambal Fertilizers and also Jubilant Foodworks. As I said, I don't know if you track them, but purely from chart point of view, any kind of pattern that's emerging?
I think I like Chambal Fertilizers because Chambal Fertilizers has seen a good consolidation between 95 and 105. And subsequent to this consolidation, seen a good breakout. It can continue to go up to maybe around 120, 125 zone. It may take its own sweet time. Structurally, it is strong. I wouldn't say it's a weak stock. So it can see some upside in the days to come. Jubilant Food, well, let me pull out a chart. It also looks good. It's seen a good consolidation and breakout at 950 zones. It's also crossed the 1,000 mark. I feel that it could be more of a kind of a false move, but so far it looks up. So I would say continue holding the stock with 950. If you want to do a fresh buy, wait, I would say. But continue holding with the stop.
Right, continue holding with the stop loss. That's the call coming in on Jubilant Foodworks. That stock trading in 4 digits now. Nirmal, what about the banking space, right? I mean, you've got a policy meet coming up on the 16th of September, and there's a lot of debate whether or not the Reserve Bank should continue with its hawkish stance on inflation. What, in your sense, can we expect from these stocks? They look very attractive in terms of valuations, at least.
No, unlike IT, I'll be more cautious with banks, although there is value in some of the good leading stocks. But sector as a whole, one has to be careful because there have been, last 18 to 24 months, we have seen that rate hikes have been very steep and almost unprecedented. So this will impact their credit growth, and more importantly, this will impact asset quality as well as earnings in next 2 quarters. So I think in banking sector, of course, long term, this sector is proxy for the economy and will do well if the economy has to grow at a good rate. But I'll be cautious for next 2 to 3 quarters, and even if you have to build portfolio in banking, you should be very, very selective.
Nirmal, what about auto? Because that's a sector where we are clearly seeing a bit of a bifurcation. The two-wheelers are doing well, the four-wheelers not so well, especially the passenger vehicle makers. So in that sense, how are you positioned on that sector? Because if your view is that there could be pause from RBI as well, then putting all these things in perspective, what kind of trajectory are you looking at for auto stocks?
I think this has been more or less in line with expectations, because the car manufacturers, the car sales, after a good growth last year, they had a high base, as well as impacted by high interest cost and also high petrol and diesel prices. Rural economy is very buoyant, given government spending as well as more flow of bank credit, and good monsoon and good agriculture, which is expected this year also. So I think this trend is likely to continue, and we'll see good demand growth in motorcycles, two-wheelers, and also say tractors and agro-driven automobile sector, as compared to cars, which will face lot more slower demand growth as well as more competition.
Well, so autos look hot. Prakash, would you agree? Even last week we did see quite a good run coming in for these some of the auto names.
Yes, we did. But again, like I said, it's more of a reactive up move. I would say that Tata Motors stiff resistance 780 on the upside. Even if it does go up, it's good, beautiful shorting opportunities around those levels. Same is the case with Mahindra and Mahindra. Upper regions, I think, again, I would say 780 is a stiff resistance. If someone has to buy auto today, then I would say perhaps look at Maruti, because it's closer to support.
Right.
Just because it's closer to support, do you go out and buy? Well, compulsive buyers can do that. But it's down move, it could go up a sharp kind of bounce, but still not a buy. Auto should be avoided.
What about two-wheelers? Anything in that space that you like? Because fundamentally those are looking quite good.
In fact, fundamentally, though it looks good, but to me, it's not very clear. I need to find a good trading opportunity as far as Hero Honda is concerned. Hero Motors is concerned. I'm not liking it. It's a no trade zone. Neither buy nor sell. Stay out of Hero Motors.
So Prakash, give us on Monday morning good 3 or 4 stock calls, either on the buy side or on the sell side.
I'll give you both.
Yeah.
I think on the short side, I would like to short ONGC. Structurally, it looks weak to me. It can slide down to levels of around 255, maybe slide down to 250. So that could be a good shorting opportunity on ONGC. On the long side, I would perhaps go in for HDIL, because it has a support of can go up to around 110. 102 is a strong support zones. Another stock that I like is the Alok Industries. Can go to around 20. One could have a stop of around 18. 2 rupees on an 18 rupees stock, I think it's good. Aurobindo Pharma perhaps? Yes, a level of 135 on the upside is possible. So can be selective.
Do you have any disclosures on any of these stocks?
None of the stocks discussed today on this show. None.
All right.
Clearly living one day at a time. Wouldn't be surprised if there's a breakdown in a couple of days. That's of course Abhijit Spawn. Nirmal, I just want to pick up on Reliance Industries. It's talking a pretty good run on Friday. It's done well this week as well. And of course, the counter did make those lows of 700 rupees, but post that there was quite a fair bit of pullback on the counter. What did you call an RIL? Does it look attractive to you, or can we expect further underperformance going into year 3 now?
Our research has upgraded the recommendation on this stock, and this becomes attractive at this level because it's just quoting at about 11 times P or maybe 6 times EV to EBITDA, and it's a core sector stock. So this is one stock which, from a portfolio fund manager's point of view, valuations are currently attractive. From a small investor's point of view, again, this is a giant company which will be driven a lot by commodity prices. So therefore, one can have a small weight in this. But from a larger funds and large portfolio point of view, the stock certainly merits increase in weightage in this at these valuations.
Nirmal, what about ONGC then? There is the FPO overhang, and we still don't have any clarity on subsidy sharing, though the company maintains that it's going to be one-third. But we remember how in a couple of quarters back it was raised 38% for 1 quarter. So with that kind of overhang, what's the advice on ONGC? The stock actually has been a bit firm at around 264 or so.
ONGC is a core sector stock and is a play on crude oil in the medium to long term. And crude oil prices, as we have seen, they have been firm. In fact, they fell, but again they bounced back. So ONGC is a good long-term stock, but again, like Reliance is a core stock, which is you have to hold it from a longer-term perspective. It is not something where you can look forward to short-term returns, because it can be volatile in the short term based on the commodity prices. But at the current valuation, the stock is is attractive for investment.
Abhijit, technically, what are you looking at, and how are you viewing RYL around 800 and ONGC around 264?
Well, the BSE oil and gas in index per se looks pretty good from a short-term trading point of view. Reliance had bounced back pretty well. The kind of cash market volumes that have backed this gain is also quite good. It seems that in a short term, the best case scenario for this stock, if it extends one leg further up, would be a possible test of 845, 850. Does it have downsides left in it? Yes, from a medium to long term perspective, the trend is still weak. So, as I mentioned, starting saying that the oil and gas space per se looks the best one for the week ahead or two, mainly from a trading point of view, where the swings can be in the range of say 5 to 8% from here on.
Monal, you've already spoken about a couple of these stocks, Chambal and all, but what about Jubilant Foodworks? That's of course now in the F&O market, and we're seeing new life highs almost on a daily basis on that one. What's the kind of advice you'll have on this particular stock?
I mean, you have to be a buyer on that definitely, because the stocks in the definitely, the best performing stock, I believe. Even on Friday, it added some 20%, I believe, on open. Yeah, 20% open it on very good volumes also. So you can't be a seller, but this is like a stock which, if you get a low level, then you want to trade with a positive bias, like you could do that. Don't have levels on that because the stock has just recently entered F&O. So, but yes, looking at the trend and looking at the built up and everything, it qualifies as a buy. And it's a volatile stock. So this is not for, this is for aggressive traders, this stock. You need to be in and out and be aggressive on the stock, either side. The swings are pretty sharp. So, that's what I can add for Jubilant.
Right.
Nirmal, what about some of these stocks like Jubilant Foodwork, Talwalkar, all these consumption themes? Jubilant at 1,000. Can you advise any of these stocks at these kind of valuations?
See, in an environment like this, I would be more cautious with small and mid-cap stocks which are quoting at a high P multiple. I'll feel safer with large-cap stocks which are at reasonable P multiple compared to the historical averages. So companies like ITC and Glaxo Consumer or Nestle. So depending on valuations, one can pick up these kind of stocks. But in a market like this, one would be safer with liquid stocks because price correction in mid-cap and small-cap has been very steep. Whenever there is some negative event, then mid-cap and small-cap tend to give away a lot of their values.
Right, Nirmal, I just want to switch focus and talk about one sector that has been bleeding and under tremendous pressure. That's the infrastructure pack that I'm talking about here. What sort of strategy would you be adopting? Anything that looks attractive in the infra pack to you?
See, although valuations are attractive, but I won't think that it's right time to invest still. Because if you really look at then the government projects are not taking off, the capex cycle has come to a standstill, even in private sector, the interest rates are very high, so new projects are just not coming forth. And public sector also we know from all kind of political crisis, so government is not able to take decisions and move forward in projects, particularly infrastructure projects. So all infrastructure companies are passing through a difficult phase, and although valuations are attractive, but I'll still be cautious and wait for some more time.
I'll continue to remain cautious and wait for some more time till he begins to buy. That's, of course, Nirmal's call coming into the intra pack. We'll sit on a quick break when we come.
First Trades, presented by BSC Investors.